Hello, and welcome to this webinar presented by ESS BIZTOOLS and our associates, COVID-19 Survival Panel. This is our session 4. Today we have as our special guests, presenters Jeff Goodrich, a business operator from Darwin, who's a user of accountancy services. So I thought he was an appropriate person to be talking to accountants today. And Jeff's an ambassador for Territory Proud, a business promotion organisation in the Northern Territory. So Jeff will be talking to you shortly about basically advising your clients to implement some cost reduction strategies within their businesses. And our other guest presenter today is Matthew Karakalakis, partner of AMK Law, legal firm in Adelaide and Melbourne. And Matthew is talking to us today from Adelaide. So welcome to you, Jeff, and you, Matthew.
Thanks,
and
Peter.
We'll be hearing from, and welcome to you, Matthew.
Thanks, Peter. It's a pleasure to be here.
Thank you. And we'll be talking to both of you a little bit later. In fact, you'll be talking to the audience and the people who are going to watch this later on through their own linkages to the recordings. If you have any questions, those of you who are watching this live, can you please type your questions into chat? If you're watching this later on in your own time, someone told me recently 3 a.m. Well, if you want to get up at 3 a.m. and watch this, you're welcome to it. Please don't ring me then, but you can send me an email to peter@essbiztools.com.au with the questions, and I will pass them on to Jeff and or Matthew and get the answers back. And we'll be publishing both the questions and the answers on the ESS BIZTOOLS website. We are recording this webinar, as I've already indicated, and those of you who have registered for this webinar will be sent a link to the recording, and we do promote to our total database and the database of our affiliates the link to the recording, and that will be going around early next week. So to all of you, wherever you are in Australia, welcome. Since we started this series, we've always tried to give you a COVID-19 update. So I will now go through the issues that seem to be causing some comment, publicity, or concern in the last 7 days. The JobKeeper definition for the fortnightly wages paid in April has been extended till today, the 8th of May. I don't know if there's likely to be any further extensions, but if you have clients who wish to claim the first 2 fortnightly payments to their nominated staff, they have to have paid those wages to them by the end of business today. Just a reminder that the Taxation Office and the government have agreed to extend the registration date for JobKeeper until 31 May. But businesses, as I understand it, will be able to apply at future dates if they have then found that they've had the 30% reduction in turnover in a subsequent month. So even the month of May, June, July, they can then apply, but they only receive the grants of $1,500 per fortnight per eligible employee from the date of that, or from the month that they've clarified that they've had the 30% reduction in, or they expect to have it in. 767,808 businesses have registered for JobKeeper. That's a lot of businesses. There were originally over 900,000 indicated that they were potentially interested. So obviously they all haven't applied at this stage. Some might have found the obligation of having to make the wages payments first and then get reimbursed a little bit daunting, and obviously haven't pursued this opportunity, but it does impose significant cash flow requirements for businesses. The ATO has issued a ruling following a number of inquiries being made by accountants and by the accountancy professional bodies as to the whole basis of this turnover projection that shows a 30% reduction. And I thought I should share some of the key components of this with you. I'm referring to an article in Accountants Daily on the 7th of May. The ATO has now issued a ruling. That's 93 pages if you want to do some nice reading over the weekend. The tax office is saying they're going to allow some tolerance around the projection predictions. A colleague of mine that's been an accountant for over 40 years rang me the other day, or yesterday it must have been, and said, in all my years, I've never seen the tax commissioner make that sort of comment. Tolerance around projection predictions. The tax office is saying that as long as you can substantiate, or your clients can substantiate, the calculations that they have made relative to the 30% reduction, the tax office will accept that. They do accept, and in fact, I think they're hoping that businesses will do better than their 30% loss in turnover predictions. So it's well worth reading, first of all, the Accountants Daily article, which is quite a good summary of what the Commissioner is saying. And then it was interesting to have their comments that are attributed to a Deputy Commissioner, Deborah Jenkins. And she had this to say: people can't predict the future. They can't have a crystal ball. Wouldn't it be wonderful if businesses are doing well in that period and didn't have a drop of 30%? They continue to be eligible, even though later on they might find their business has kicked in and people are shopping again, buying again, out in restaurants and cafes. You can't get much clearer than that, I don't think. She then goes on to explain that the monthly declaration that every business has to make that are part of JobKeeper will instead be used to track how a business is progressing under the JobKeeper scheme. The tax office are claiming, and they've been fairly consistent in this, that they're not going to use that information to come in and undertake audits as to what's happening within a business. So that's the purpose of the monthly declaration each month. It's to make sure your business still exists and to check who your employees are that are employed for that period of time. There had been some concern, I know, from a number of accountants and some businesses, obviously, as to what the tax office was using this prediction for. And perhaps this comment from the tax commissioner might encourage some of the 900,000 original businesses that showed interest in this scheme that haven't registered yet to now come forward and proceed with doing so. The Prime Minister today is expected to outline a 3-step plan to reopen Australia. Many people will be saying that's great news. In the Northern Territory, they're well on the way to this because I think the Northern Territory only had 28 cases of coronavirus. So the big question to you accountants is, are you communicating with your clients relative to their reopening strategies? And we talked about this in some length last time we had one of these webinars last Friday, where we had Andrew Geddes, former chairman of Green Cross Limited and a well-known accountancy industry consultant. And Andrew went through a complete checklist of items that he thought that accountants could be undertaking to help your clients to be ready to spring back into business, to get out of the doldrums of the restrictions that they've been trying to operate under, or not even operating at all because of the restrictions. So are you communicating with your clients? The Prime Minister and most of the premiers and chief ministers seem to be on side and saying we've got to get the economy moving again. I noticed the Treasurer is saying that every week that the whole workforce can get back is going to save $4 billion a week. It's a lot of money. So what are you doing to help your clients get their strategies right is the big question. And according to the Financial Review today, the phase 1 businesses are expected to be cafes, restaurants, offices and retail. So they're the obvious clients that I'd be suggesting you start talking to make sure that everything's ready for this re-entry into business. And these phases, according to both the Australian and the Financial Review today, are going to be separated by approximately 4 weeks as the government moves through this. So if you predict that out, we're looking somewhere around the August-September period. The government is hopeful of having everyone back into work. And they want to stop all this JobKeeper payment most definitely from the end of September. So hopefully that gives you an overview of what's been happening in this world. I now want to introduce you to Matthew Karakalakis. Matthew's a lawyer with a practice centred in Adelaide and Melbourne, AMK Law. Matthew has written us a very interesting article on the problems that businesses might be having with certain issues relative to contracts and force majeure and other issues relative to COVID-19. So good morning or good afternoon, Matthew. How are you? And I'll do the switch so that you can start presenting. Thanks.
Thank you very much for the introduction, Peter, and it really is a pleasure to be here online having this opportunity to present what I think is a very interesting topic. And the topic of force majeure in this global pandemic period has gained a lot of insight and publicity amongst lawyers and business owners alike. It's also good to be here and have some type of human interaction in this particular period as well. So seeing yourself here today and Jeff, and knowing that people are listening to our presentation is a good thing, particularly in this time. So coronavirus, COVID-19, as we all know, is a global pandemic. And as a result of this, there's been a significant amount of change in the way that we conduct our lives, in the way that we're doing business. And there's been a whole heap of impacts in the entire world economy. So from the standpoint in which I'm speaking from today is particularly in respect of the notion of force majeure and how it relates to contracts. So first of all, it might be useful to understand, what does force majeure actually mean? It's a fancy sounding word, and it comes from the French. Force majeure is a term which essentially means a superior force. And so one of the things that I want to cover today is looking into whether COVID-19 as a global pandemic can actually be considered within the meaning of force majeure. One of the really interesting points on this is nobody had the foresight to see the effects of COVID-19, the way that it's impacted the world. So if you think about contracts written in the past, how could there possibly be the foresight to cover circumstances such as COVID-19 in its form of the global pandemic? One thing I'd like to highlight at this point is the principle of frustration, because frustration is a legal principle that has been around for a long period of time. And I think that many people that have entered into contracts in the past would have come across the term. It's also important to understand the term frustration, because force majeure is in fact related to the legal principle of frustration. Frustration is a doctrine that's grown out of case law, and it essentially means that if there's something that has happened that is outside the control of the parties, for example, there might be a extremely significant change or otherwise a radical change in the circumstances of the business contract. You know, for example, are the parties involved in completely different businesses? Have there been global strikes? Have there been events that the parties haven't had a control of that have frustrated the contract? And in those circumstances, there is a common law, case law notion that says the parties' obligations under the contract no longer stand. So to give some more examples of what frustrating events can be, think about things like the physical destruction. So for example, if there's been a contract for the sale of equipment and that piece of equipment has been severely damaged by a third party, therefore being physically destructed at no fault of any of the parties to the contract. That's an example. Or has there been some political intervention? Those kind of things traditionally fall within the ambit of the common law principles of frustration. But COVID-19 is affecting more than just business. It's affecting the entire world. And so in this context, we look at business contracts and whether they can be held up or whether they can be exited as a result of the circumstances we're currently facing. If we take a step back for a moment, we look at what are the elements of a business contract, because I think it's really important, particularly at this stage where we're considering whether force majeure can be used as a legal tool to actually get out of the contract. I think it's really good to understand, first of all, when are we in a contract? Essentially, the points of a contract, the elements of a contract are these. You need to have an offer that's made from one person to another, and then that offer needs to be accepted. After that, the parties themselves need to intend to be in a legally binding relationship. The term here is whether there's an intention to create that legal relationship between the parties. There also needs to be consideration. So something of value needs to form the substance in which one party is giving to the other party and vice versa. There's a really old English case that looked at the principle of a peppercorn, which was of very, very low value being exchanged for something of high value. And the English courts in this particular case decided that yes, even a peppercorn. So what it means is that the consideration itself doesn't have to be of equal value, of high value, but there just needs to be something of consideration to form the basis of a contract. And then once you've got a business context, once you've got a business contract that's been formed, then the parties to that contract have the peace of mind. They know that there's a legally enforceable document in place, and really contractual principles, to a large extent, form the backbone in which our commercial economy operates. So contracts have a really important part to play. And it makes sense for it to be difficult to actually get out of the contract, because we want to be able to know that our business operations, our business negotiations, the deals that we make are actually going to be honoured. If we look at a written contract for a moment, we could imagine a clause in the contract that has a force majeure effect. And in fact, many contracts that I've written in the past do have the force majeure provision. And it's interesting because the force majeure provision is often one of those terms that are included in the contract, but nobody ever really seeks to rely on that term. The reason being because the basis of force majeure, just as I was explaining earlier, being the notion of the superior force, rarely arises in that legal sense. So Remembering though that the force majeure clause is there to help the parties if the opportunity or event arises, such as a catastrophe, global pandemic perhaps, and if the clause is triggered, then the parties could have the right to exit the contract without having to be bound by the penalties and other legal obligations that would otherwise apply. An example of a force majeure clause, for example, could say something like, the parties under this business contract, either jointly or severally, are not liable for any loss, claim or damage, where such loss, claim or damage arises directly as a result of the other party's breach, or where that breach is an immediate result of force majeure. There are quite a few different variations on that clause. If you're in a business contract, and if you're wondering whether force majeure is triggered, one good thing to do is to have a look and see in the definition section of your contract, the way force majeure has been defined, and read that in the context of the force majeure clause itself. Normally, you can easily identify the force majeure clause because you'll see a heading on top of that clause. And so in this particular period of global pandemic, perhaps if the force majeure term is defined widely enough, it could help us in exiting those contracts where there's such a need. We've never experienced a situation like COVID-19 before. The definition of force majeure in your contracts most likely would not mention anything to do with an illness to the extent of COVID-19. The definition is extremely useful. And really, the definition and the clause itself is what needs to be examined closely to see if you're able to exit your contract or whether you're still able to enforce your contract against somebody who you think is in breach. Another great point for you to consider, and I would like to give you with as another takeaway, is consider the contracts that you have in place. Consider whether any amendments are needed to either give you the flexibility to rely on the force majeure clause or to enable you to limit the scope of the force majeure clause if you still want to be able to enforce your contract in this particular COVID-19 time. Remember, business contracts generally give that definition. And you also have the right under most contracts that are already entered into to vary the contracts if necessary. And remember to negotiate the contracts and have the contracts drafted in the ways that are going to help you most. So I would like to say and remind you that force majeure itself is normally limited to those things like natural disasters, floods, wars, riots, and government large-scale issues. But still, the global pandemic may be covered, and you need to look at your contract a little closer or negotiate a little tighter to ensure that you have the outcome that's going to help you most. I hope in this presentation that I've been able to give you some understanding and perhaps even shed some light into the impacts of force majeure and on the contract principles to help you understand what you need to know in this particular period of coronavirus and COVID-19. Thank you very much for listening and being a part of the presentation today. And thank you, Peter, for giving this opportunity to be able to share to our online attendees the points that I've explained.
Thank you very much, Matthew. And we'll just go back to our screens. And Matthew will be returning in about 20 minutes' time to give a general overview of legal issues that might be confronting you. We will be handling questions near the end of today. So I do have one question in, which we'll be answering then. But if any others wish to send me through questions, please do so. Just type them in the chat, please. I'd now like to introduce you to Jeff Goodrich. Jeff's a Darwin-based businessman who has had a number of different businesses, but he's a keen promoter of business organisations and coordination, and he's the ambassador at large for Territory Proud, an organisation that has about 380 members based in Darwin in the Northern Territory. Jeff's theme today is talking to accountants about ways and means you might be able to advise your clients on cost reduction strategies with one particular area that he's going to concentrate in this presentation. So good morning, Jeffrey.
Morning, Peter.
Thank you. If you'd like to now proceed, thank you.
I will. Just before I share my screen, I'd just perhaps like to outline a few things. Firstly, our Chief Minister has told us we can go and have a beer and a palmy in the pub next Friday night.
Well, you're lucky. You have one for me.
Yeah. And everyone's looking forward to that, as they are right around Australia. So, yes, we are coming out of early. We've only got 2 people now in the territory who've got coronavirus and they're in hospital. And we've been very, very lucky. We've not had one person-to-person transfer since the start. But we're also very worried about our Indigenous communities and what might happen if anything goes into those communities. So while we're in the main cities, the main towns and cities, and getting a bit of freedom, the isolation of the communities remains in place, and it will remain in place for some time to come. And the last thing we'll do is open up our borders, so it may be some time. For us, that's bad news because the next 5 or 6 months is usually the high season of business activity, particularly with tourism. And now it would appear that our tourism industry won't have any real income for the next 12 months at least, because our borders are likely to be closed, and there'll be no overseas tourists certainly, and there's unlikely to be too many. The other downside for the territory is we've been in a what can only be called a recessed time for the last 18 months since the major project of the Impacts gas plant, who had about 8,000 workers on site working every day, that's down now to 300. And so for the last 15 or 16 months, the downturn has been quite heavy, and our government has had its income cut as well. And so it's been in a very difficult time. So we were already economically in a pretty bad shape, and our businesses have been struggling through downturns right across the industry up until now. And I've spoken to I visit a lot of businesses with my role as founder and ambassador for Territory Proud, and the feedback I'm getting is they were already wondering whether they should shut their businesses down anyway, and then this came along. So it is going to be a tough time. And so my observation is that from an accountant's point of view, because people are seriously working in their business, you need to help them work on their business. And my particular passion is about smart energy and renewable energy and ways of saving money, because as everyone knows, $1 saved is $1 profit. So I work with a number of electricians. My business is Great Power Solutions, and I work with 6 installers across the Northern Territory from Darwin down to Alice Springs under the brand Smart Energy Alliance. And we've concentrated on trying to find ways to help people cut their costs. Obviously, solar is the thing that comes to mind for most people first, but there are quite a few other options as well. So I'd like to share some of those with you. And start. Okay. So, like other states, there's been stimulus packages here in the territory, but ours went very quickly. We had a domestic one for for $30 million, and they built that up twice, and they took it up to $100 million, and it was all gone within 2 weeks. There are also packages for businesses, and also for not-for-profit organisations, and all that money is gone. But we do have still some energy efficiency grants. So yeah, certainly what's happened has changed the world for a long while, and business in particular. And what we've concentrated on is having examples of how you can improve your energy efficiency and management and security to reduce your costs. And a big thing about the renewable industry, there's a lot of big solar farms being built. There's quite a few issues with some of those that they can't produce as much as they hope to. So it's pretty clear that big solar is not going to provide any significant savings to energy users in the short term, probably will in the long term. So it's only behind the meter where people can save money, and that's putting rooftop solar on your own business. But as in any business practices, the important thing is first to gain the data you need to make decisions. So energy monitoring is a fairly low cost and compared to what everything doing it. You know, depending on the size of the business, it's from a couple of $1,000 up to $10,000 or $15,000 or $20,000 if you've got a big business. But it's money well spent, because without having the full data, and having a power bill only tells you how much power you've bought. It doesn't tell you when you're using it and how you're using it. And even if you get data from the grid provider, they'll get you more information, but they won't tell you about voltage and how that works. So, so that's an important thing. And I've in those graphs there, you can see the one at the top just shows that's a typical day in a large not-for-profit business that we put 100 kilowatts of solar on last year. And the green is the solar, the red is what they're buying off the grid, and the green is their actual usage. So we can see there that they've got a big spike in the morning. It lasts a long time, which is the air conditioning coming on. And there's other spikes during the day. So we can, with that information, we can go in and look at that in the data and see what we can do about it. The graph below, which is a bit hard to read, I realise, shows the performance of a system in Alice Springs, a 100 kilowatt system, and how it's going compared to the previous years. So again, you can see if there's changes. So I'm now going back to them and saying, you're using more power. It looks like we should put some more solar on the roof. And that particular business has saved $145,000 since we put the system on just over 3 years ago on the 1st of April. So monitoring is important, and energy management is also important. And energy management is about modifying how you use your power. And there are many businesses with different demands, but if you've got air conditioning and refrigeration, there are ways we can help manage that and reduce how that's being used. And also installing lights and other things. So, as I said, monitoring is a very low cost item in the overall scheme of things. And there are grant monies available in most states for monitoring. In the Northern Territory, it's a 50% contribution of the cost from the government. So that makes it very viable. The energy management,
Jeff,
energy efficiency methods that is probably not well known but very effective is called voltage management and power factor correction. And basically, power factor correction and voltage management is modifying and putting in equipment to modify your premises to have clean power. So if you see in the graph, the top line, which is staggered, that's how you normally buy power. So the grid providers, they are supposed to supply 230 grids, but I've seen variations from 270 down to 183 from a grid provider here in the Territory, and some of those were right in the centre of Darwin. And it's the same elsewhere, and this is becoming more of an issue as more solar gets into some of the grids, because it can it can vary the voltage and have an effect on pushing the voltage up. So the key, so the second line 230, that's what they're required to provide, and the bottom line, the green line, is what we can achieve by putting an Energy Mate Plus unit into the premises of your clients. And basically what it does, it sits behind the meter and says, we only need 220 volts to run everything in this business. Please don't give us any more. And because it does that, that's all you pay for. So if you're getting an average of 245 volts and you only need 220, by putting this equipment in, you can make some significant savings. And there's an example there on the right, which is a bit covered up by our pictures, but I think we can pick up most of it. So a 200 amp unit, which would do quite a significant size business. I put one into a hotel recently in Timber Creek, and because they were blowing up equipment all the time, because they're only 200 metres away from where the power's being generated over the road, the power station. It's a diesel generator. And they also have problems during the season when the bats hit power lines and the voltage goes all over the place. So in this case, where we can get a 50% subsidy, less before GST, on this piece of equipment. So it's $27,000. We get a $15,000 subsidy. The net cost, including GST, that should be $13,000. My apologies. The annual savings are about $12,000. We can fully fund this. So this is all these things are cash flow positive, and there's special green funding available for all energy efficiency grants. So you could take into consideration the 100% tax deduction, which the people in Timber Creek got. The net benefit is very good, so about $10,000 net after they've paid the payments, and after the 4 years of payments, their savings are $12,000 per annum. So in the first year, this particular one would be cash flow positive after payments of $9,788 for a small business. So quite well worthwhile. And the other thing which isn't into these numbers is, and that's why Timber Creek went with it, it also saves all the equipment. So if you're getting a nice clean 220 volts, your light bulbs last longer, your refrigeration motors last longer, your computers don't blow up, so the significant savings. So some of these devices have been put into service stations in Adelaide, into one of the groups down there on the run, and they calculated in one particular site, they measured it, and they paid for the cost of the device in maintenance savings. So lack of the labour of replacing light globes and all those sort of things in a service station and some fridges, etc. So the savings are beyond what I'm showing here, but that'll be different with all businesses. Another option to reduce power, and in the Northern Territory, because we're warm all the time and it's a beautiful 32 degrees today, air conditioning is often 80% of the cost of electricity in the Northern Territory. And that's a sake for all Northern Territory schools, which I work with in particular, but other businesses as well, service stations. It's only the factory workers who aren't working in air conditioning where it's less. So there are three different options we have here to provide the different ways of reducing the use of power in air conditioning. They all say the same result though. They all can save 10 to 15% on people's power bills, and also it extends the life. And all these operate within the guidelines of the manufacturer. So this is a add-on afterwards, but basically it's managing how the air conditioners to run in the most efficient way. And that one that says Smart Cool there shows you the sort of savings that you get, because you can turn the compressor off in certain phases. It doesn't change the temperature greatly in a room, and it doesn't change the cycles. There's a great range of those, and depending on the size of business, we're currently looking to put one into a school that has over 100 inverter air conditioners, and we'll be using that to save them money, but also in conjunction with the solar to improve their efficiency overall. Obviously, solar is very popular in the Northern Territory. The government have brought in a subsidy for batteries, and that's coming in now. So this example is solar plus a small battery, which means if there are blackouts, which we do have up here because of cyclones, etc., you can still continue to operate the basics in your business if there's a blackout. So people have avoided this because of some of the costs, but the battery prices are coming down, and in particular, so this is a medium-sized solar system, a business that's got a power bill of about $3,000 a month. This would be the sort of system they'd be putting in. So we use local installers, and they all have a five-year labour warranty on their work and support. And we're using premium panels and premium inverters. The battery system is a new system. It's an Australian design, and is a leap forward, a massive leap forward in battery technology. The RVO battery has a 20-year life and a 90% efficiency. And you can see on the right there, it's done 35,000 cycles. That's about 35 years worth of operation, and it's still operating at 90% of its original efficiency. It's safe. It's unlike lithium-ion batteries, which are prone to fire. This battery is very safe, and the storage medium is actually graphene, which is inert. And it's approved for use up to 80 degrees. So it won't lose its efficiency like many other batteries do once it gets over about 30 degrees. So in this case, the total price of the system, including GST for the system and the batteries, was $69,750. The short-term trading certificates, which are available all over Australia, it's a national scheme, the Renewable Energy Target Scheme. There's a rebate of $24,000. In our case, we can get a $20,000 subsidy for the battery. Net cost is $25,000. The annual savings are about $15,000. So in this particular instance, the cash flow benefit in year one is about $21,000 because we can again fund it. And for approved purchase, we can even give them 3 months relief on the payments from the start for the coronavirus downturn. And over 25 years, about $430,000 worth of savings. So as we come out of COVID-19 and the issues, business costs are very important, and I think it's the role of accountants as the advisor of, and time to think about this, to educate themselves about these sorts of potential savings and share them with their customers. And we're happy to share with you any information we have, and we operate in the territory. We do also operate around Australia, and we've got affiliates elsewhere. This is a 100 kilowatt system, so this is more for a business with a power bill of about $100,000. Sorry, $10,000 a month. This is the largest you can go and still get the short-term trading certificates, which is obviously very significant in this case. So $66,000 worth of subsidy at the moment. The grant for solar up here is only $10,000. It's only 10%, not for solar, where it's 50% for other energy efficiency savings. But the annual savings here again are $37,700. The repayments are $22,000. So the net tax benefit in year one is $64,000, and the total savings over 25 years is $1.2 million. So very significant. And you can see down the bottom there, we put the finance in, so significant reduction in the power bill, the savings, and once the finance is paid off, it's a bit over about 55% is the total cost of the solar. So in summary, that's just a few examples of ways you can save money and improve your cash flow with flexible funding plans in this area. And there is going to be a great need for businesses to become, as I believe we will come, there won't be a V curve in the recovery. I think it'll be a long, slow recovery. So any savings we can make and share get out doing this. And also the side benefit is we're helping our roadmap to renewables plan and also addressing the climate issues around the world. But really, it's a financial decision. It's a financial decision. The climate benefits as a sideline, as far as I'm concerned, and I've always looked at it that way. It's got to be a financial benefit for the company. Thank you, Peter.
Thank you, Jeffrey. What we're going, just a comment, we'll be placing the PowerPoint slides that Jeff was using then on the ESS BIZTOOLS website. So if any viewer or someone that's watched this video later on, if you want those, please go to www.essbiztools.com.au to the Survival in Difficult Times Learn More, and they will be there so you can access them. And by all means, then please contact Jeff for further details. I'd now like to reintroduce Matthew Karakalakis from AMK Law in Adelaide and Melbourne. And Matthew is now going to comment on other general issues, legal issues relative to COVID-19 for accountants and for business people to be aware of. So welcome back, Matthew.
Thank you very much for having me back again, Peter. I think, did we mention before that there was a question as well that somebody might...
There's a question I'm going to put in when you're finished, so in about 6 or 7 minutes time.
Okay, I understand. So the issues regarding COVID-19 really do stem from the points that I was making before about COVID-19 being a global pandemic that we've never seen before. And so with this in mind, there are many legal issues that we need to keep in mind. In the time that we have available today, I'm going to be able to highlight some of those issues, and at least that will give our attendees and people that are viewing this presentation moving forwards an insight into some of the points they might need some deeper legal advice on. So as we know, there's a lot of legal requirements stemming from employment law, and this can particularly be relevant where we look at the organisations that have got a lot of employees that are currently working from home. There's a lot of employment requirements to do with government initiatives, and some of those you touched on earlier before, Peter. And obviously, for those with employees, it's important to really make sure that proper health, safety, and leave requirements of employees are properly complied with. In terms of corporate law, there's been some real changes to the current investment framework that we're currently in. So there's been some effects into our property and business environment, and the requirements that the Foreign Investment Review Board consider. There's effects into our capital market space, and there's been some real significant flow-on consequences into share prices, particularly if we look back a few weeks. And the global financial crisis has really affected our ASX-listed companies in that regard. There's also a need to consider contracts overall. So we've spoken about force majeure and frustration in contracts previously, but there's also considerations about how can actually we satisfy the requirements of contracts. So for example, for businesses that might have entered into a contract where there was a bit more resourcing and funds available, and no longer are those resources available, what should those businesses be doing? What happens in terms of the breach of contract? There's also a lot of issues flowing from contracts to do with debt recovery. So if somebody's owed money under a contract, and say that could be in the business sense. So for example, you might be a director of a business, of a company owning a business. Your business has provided some goods or services, but payment for those goods and services aren't occurring. Well, then it's necessary to consider the debt recovery processes to do with following up for payment of the debt, perhaps then seeking legal representation to write a letter of demand and pursue the debt for you. There's the mechanism for credit to statutory demands. There's been some significant changes in that regard, because previously there was a matter of, from memory, 21 days that the credit to statutory demand could then, if not comply with, result in a wind-up application. Now that has been extended through amendments to the Corporations Act, and now there's a 6-month period from the date of the non-compliance to the point of actually being able to make such an application. Also, in light of that, there's been some changes to do with the requirements on directors when trading insolvent. So that's another area that really does need to be considered. If you are a company director and you're concerned about the obligations that you have when trading insolvent, it now is a good time to get legal representation, legal advice, and perhaps also speak with your accountant to see how the changes to the insolvency legislation and your trading obligations have been affected. There's been a whole heap of effects into real estate. So tenants have got a whole set of relief, and there's been policies that have been put into place, both at a Commonwealth level and a state level, particularly with respect to moratoriums and rental requirements. There's a lot of tenants, both in commercial and residential properties, that are finding it very, very hard to be able to pay their rent. So with that in mind, it's very useful if you are a tenant or a landlord to understand what are the moratorium obligations. In what circumstances could somebody as a tenant be actually forced to vacate the property for non-payment of rent, because there's been some significant restrictions in that regard. There's also some relief available, which I think is a good thing for landlords, because in this particular time, tenants, of course, have been particularly hit. For example, and especially if you're a tenant of a gym, a tenant in a hospital business, or a tenant in one of those other businesses where a forced shutdown has been imposed, obviously then rent payment becomes much more difficult. And what about if you're a landlord? We are all facing the effects of this global pandemic. And so it's important for landlords to also understand some of the government initiatives that are available for landlords in these circumstances when rents aren't being paid. There's also an obligation really on all of us as individuals to understand the restrictions, lockdown periods, and penalties that can be imposed. For example, those in Victoria have got some severe and have been experiencing restrictions regarding lockdowns and inabilities to live what would otherwise be an ordinary life. There's social distancing mechanisms in place, and there's also some significant penalties if some of those requirements aren't complied with. So another example of those is in South Australia. If somebody goes and travels interstate or overseas, there's a 14-day period in which the person needs to be in quarantine. Not complying with those obligations can result in penalty. Perhaps you've got a construction business. There's obviously significant contracts in construction, and some of the points that I made earlier today in the force majeure presentation would equally apply in the construction industry. These are just some of the main areas in which there's been effects. One other area I'd just like to touch on is in the space of immigration. Obviously, there's significant impacts and restrictions that have been imposed through changes that are enforced through Australia's immigration department, and that also has flow-on consequences for those that would not ordinarily employ or sponsor foreign workers. But these, again, are just some of the areas. There are many more because of the vast impact across the globe that coronavirus, COVID-19 has had. If you have any particular questions, you can feel free to contact your solicitor or perhaps even your accountant to be able to help you. There's also a lot of information that's available online, ATO website, for example, but most other government departments have a lot of information about the effects and flow-on consequences throughout the various areas of law that have occurred as a result of COVID-19. But most of all, let's remember keeping ourselves safe, keep those around us safe, and as a joint community effort, I think we're doing really, really well in this COVID-19 time, and I think that we are winning the battle. It's just a matter of time, I hope, that things get back on track the way they're meant to be.
Yes, thanks very much, Matthew, and I'm sure we all agree with those sentiments. And thank you very much for that overview of the legal landscape that is affecting all businesses, and therefore accountants need to be aware of a lot of these legal changes. And for some of your clients, of course, to be making sure that their solicitor, legal advisors are present. So if anyone watching this video has any questions they'd like to submit to Matthew, please send an email to me, peter@essbiztools.com.au, and we will be placing on our website Matthew's contact address. Do you just want to give that to us now, Matthew?
That's fine. I think if the listeners want to contact you, and
okay.
I'm more than happy to answer any queries that come through.
Okay, thank you very much. Okay, so I now want to, just before we just go to the, seem to have lost my questions now. I'll just move on and then we'll come back to that. The next session is next Friday, the 15th of May at 12 noon. The guest presenters are Paul Barnaby. Paul is an accountant, but he's these days he calls himself a predictive accounting consultant because he works in budgets, cash flow, forecasts, and predicted balance sheets, all in the future, what's going to happen. So what does the business plan say, and what's it all going to say in financial terms? And the other speaker is Trent Butler from Sydney. Trent's a young chartered accountant who's going to be talking about leveraging the power of social media to attract the right type of clients. We thought this was appropriate, not so much attracting the right type of client, but having someone who clearly understands the various social media platforms and can talk about how that can be adapted to suit accountancy firms. Now, I've somehow or other I wrote down that one of the questions, so I just can't seem to bring them up. But the question was, and we should answer that at this stage, I think, was looking at the question about if your business has qualified for either the month of March or April for the JobKeeper program, and then the turnover changes and you do not have a 30% drop in turnover, say in the month of May or June, have you got to then forego receiving the JobKeeper payment? The answer to that is no. The subject to a very important qualification, I think, and that is that you have accurately prepared, in accordance with the tax office guidelines, the calculation that you made for either March or April, The calculation is to be made consistently. So if you use cash accounting in March 2019 to determine your income, you must use cash accounting in March 2020. So you're comparing apples with apples. Or if you're using accrual accounting, it's got to be consistent in both lots. You should not be deferring invoicing and following up clients. And you should be keeping appropriate records. My strong recommendation to you is to, and primarily we're talking to accountants, is to make sure your clients have a file, or if the accounting firm's preparing these estimates, that you have created a file of how these calculations have been prepared, and you retain it. And the tax office guidelines are saying you need to retain those calculations for 5 years. So it needs to be set up as a proper file note, how the calculation's been calculated. The tax office is saying that it does not worry, it's of no effect if in the following months your turnover has not dropped the 30%. And once again, I just might refer to the comments that are in yesterday's Accountants Daily. And what we will do is include a copy of that Accountants Daily article also within our website, www.essbiztools.com.au, Survival in Difficult Times, learn more, so that any of you who haven't got access to that can get it. But you don't have to be an accountant to access Accountants Daily. Just go onto the web, www.accountantsdaily.com.au. But the Deputy Commissioner, Deborah Jenkins, has said that people can't predict the future. You don't have a crystal ball. As long as you've done the calculations reasonably and accurately in accordance with the Commissioner's guidelines, that you will have no problems. But you need to make sure that you have kept a file note as to how those calculations have been done. The next week's webinar is going to be presented by or hosted by me. We'll get rid of my name. To register, please go to www.essbiztools.com.au/webinars. For more information, you can go to our website. I've mentioned it a couple of times, and then go into the section on survival in difficult times. Or you can send me an email, peter@essbiztools.com.au, and I will get back to you. This virus will end at some stage. The Prime Minister and his advisors are obviously confident that we're going to be well on the road to recovery over the next few months. And I think we should be all quietly proud of what's been achieved in Australia and New Zealand when you look at some of the horrendous results from overseas countries, particularly the USA, UK, France, and Italy. So the virus will end. It's not going to last forever. The opportunity will emerge for accountants to be more active with your clients. I don't expect that everything's going to go back to the way it was in January or even February when this is all over. Indeed, Andrew Geddes, who spoke on this program last week, was most emphatic that those days have gone. There's going to be a lot of changes and going to be a lot of new challenges for accountants to be delivering a more rounded service to your clients. Tax is still important, but there's a lot of other things that are important. And some of the things that you've been asked to do in the last 5 or 6 weeks is probably an introduction. Hopefully it's not through another virus, of course, but through to some of the wider range of services that your clients will be looking for you to provide to them. So ESS BizTools and our affiliates, who are the businesses presenting these webinars for you each week, are committed to helping accountants, business advisors, and bookkeepers to guide your clients so that they have a strong understanding, so that these businesses are going to emerge very strong at the end of this process. So stay safe. Thank you for your participation and good luck. Have a great day. Thank you. Goodbye. Goodbye, Jeffrey. Goodbye, Matthew.
Goodbye, Peter. Thank you very much for today.
Thank you for being with us. Goodbye, Jeff. You see, maybe he's gone. But okay, thank you very much. And we will be sending the recordings, the links to the recordings on this webinar to everyone in the early next week. Thank you. And I hope you all have a good weekend. And